Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with the gold market. So you can see yesterday we talked about the currencies just because gold market was closed on Independence Day. So once market has opened, you can see the collapse has happened. So actually we talked about this pattern even in the beginning of the previous week. As probably everything is going to this and in general it is, well, it agrees with our fundamental view. As we said, for the summer gold should remain under pressure. Mostly it comes from our fundamental analysis from the one side, and from another side is some specific of the psychological issues of the some mentality of the investors. So we think that investors currently are coming and entering in the second stage we are calling as a big confusion and delusion. But a few reasons. Actually, all things that I tell right now is a subject for a fundamental update, and now I already see really big amount of the information for a weekend. But in two words, if in the previous couple of months where we were showing to you some background and specific statistics, data, performance of the Fed, balances, performance of the stock market, bond market, so we have provided evidence on the problems that the economy has, and that was the reason to make the following conclusion and to suggest the performance that we see currently. But it was in the previous 2 months. This was the time when investors still were believing in Jerome Powell promises to hold the inflation. They were believing in speeches that tell to investors that everything is going well, so the economy is strong, and so on. Currently, we're coming to the next stage, which we call as the big delusion. It's just because investors are doing currently absolutely wrong conclusions, because all the stuff that we talked about 2 months ago is becoming evident right now, and they start reaction on this evidence in a well-known cliche. So they're running into the bond market. You could see what's going on in the treasuries. This is a very unique situation when you see simultaneously the drop on the interest rates and you see drop on the gold market simultaneously. What does it mean? It means that investors selling everything, stocks, and buying the gold, absorbing United States dollars because they need the liquidity, and buying the bonds, investing in the treasuries, trying to hide in a safe haven. But this is absolutely the wrong way. That's really most bad thing that they could do right now. Because as I will show you later in the weekend, the United States bond market currently has the big problems. Investors currently are doing the most wrong thing that they could do. But they were educated in this manner and they're just following their indication, what they need to do currently. But actually, United States bond market has the problems with the initial offering of the new bonds. No demand actually stands currently on the initial offerings of the new debt issues. We see massive sell-off on the secondary market, and if you will take a look at how much Fed has sold according to the quantitative tightening program, you will see that they just missed their promises. So they promised that they will sell approximately 48 billions, but they have sold just 700 millions, so 6 times lower. So they even haven't started the quantitative tightening, and you already see the performance what we have in the markets. So and currently the fact that we see the big sell-off on the gold and running in the treasuries, this is the correct behavior is absolutely vice versa. So you need to buy gold and sell treasuries currently. But since we're not going to run against the running train and we not have a lot of money to contradict this trade and direction, we are taking the just passive position and waiting when this downside trend will be over And when the third stage of the event will come, when investors understand the things that we are talking about right now. And this moment, as we expect, is closer to the end of the year. We should get the sharp reversal in the gold market. So that's what we intend to see. And currently, as you can see, the active sell-off is starting, which is very important and actually confirms all the things that we were talking about in the fundamental background. So on the technical side, you could see the butterfly target that we have specified, 1760, has been completed. But at the same time, it's a very similar picture on the euro currency actually. At the same time, we have two moments. First of all, market is not at oversold, so it has room to keep going lower. Second, we have the acceleration to the 127 target. So actually it has been reached just with one session. And that tells that downside continuation to the next target seems very probable. It's just a question of time. This is our first moment. Second, take a look that we also have here the ABC pattern that not quite completed. So somewhere around 1720, 1730, that will be the next area that market is tending to. So downward action should continue at the nearest time. On the 4-hour time frame chart, currently we could keep an eye on maybe minor bounce, just because still the target of the butterfly is completed, and theoretically market could try to show the bounce here. The first glance, it seems the two levels, 1792, which is the 30% of this starting of the week downside action, and major confluence here based on the butterfly swings, so 1807, 1811. But in the current circumstances, guys, I think that this level is a bit too extended. Personally, I would focus still on this area, just because also this is too low stands right there. So retesting of this area, it seems more prominent in the current situation, is more logical before downward continuation. And if you take a look at the hourly chart, you'll see that 1792 actually is also the confluence. So, and I even wouldn't expect the situation where market will reach just the 1782, so just near a standing target. So that's why initially I think that it makes sense to focus on these two levels. If you are considering taking the short position or you would like to add to existing position, it's probably these two levels that we need to keep an eye on. It's because market just has started downward action. So hardly it will stop with this and will be interrupted with a strong upward pullback immediately. Probably market should develop it for some time before more or less meaningful retracement will happen.